Hey everyone, welcome back to Corporate Decoder, the place where we find out that even window companies can have some pretty crazy financial moves. Today we are diving deep into Tecnoglass Inc.'s latest quarterly report, and let me tell you, it's a look into a company that's building success literally from the ground up. We'll uncover how they're dealing with changing market conditions, how their expansion is playing out financially, and if their future looks as bright as their glass products. This report covers the period ending June 30, 2025. It's a peek behind the curtain at Tecnoglass's performance in the second quarter and the first half of the year. First off, Tecnoglass makes architectural glass and windows for homes and businesses around the globe. They're vertically integrated, meaning they control a lot of their supply chain from making the glass and aluminum to selling the final windows and doors. They're known for high quality products, and they've even been recognized by Forbes as one of America's most successful small cap companies for 2020. Let's get straight to the numbers. Looking at their balance sheet as of June 30, 2025, compared to December 31, 2024, we see some interesting shifts. Their total assets have grown from about $1 billion to over $1.1 billion, to over $1.18 billion, to over $1.1 billion. Their cash position, which is like their readily available money, has increased slightly to nearly $138 million, the $8 million. This healthy cash balance is always a good sign for financial stability. Now, take a look at their trade accounts receivable. They've gone up significantly from about $203 million to over $227 million. This means customers owe them more money, which makes sense if sales are up, but it also means they need to be diligent in collecting payments. Inventories also saw a jump from about $140 million to over $176 million. This could indicate they're stocking up to meet future demand, or perhaps anticipating supply chain challenges and stocking more raw materials. Their property, plant and equipment has also increased substantially from around $344 million to over $421 million. This jump is a direct reflection of their investment in facilities and machinery to support their growth plans. Total liabilities have increased from about $385 million to over $445 million. While debt is a part of business growth, an increase in liabilities needs to be watched closely alongside their ability to generate cash. Retained earnings, which is the accumulated profit the company has kept, has grown nicely from about $538 million to over $610 million. This shows they're not just growing, but they're also becoming more profitable over time. Now, let's talk about how the company is performing in terms of revenue and profit. This statement shows us their income over a period. For the 3 months ending June 30, 2025, total operating revenues hit over $255 million compared to about $219 million in the same period last year. That's a solid increase of over 16%. And what about gross profit, which is what's left after the direct costs of making their products are paid? It jumped from nearly $90 million to over $114 million. That's a nearly 28% increase. Even better, their gross profit margin improved from 40.8% to 44.7%. This means they are becoming more efficient in their production and perhaps passing on costs more effectively. Operating income, which takes into account all their operating expenses, also saw a healthy rise from about $51 million to over $61 million. This shows their core business operations are becoming more profitable. And the bottom line, their net income for the quarter increased from about $35 million to over $44 million. This is a nearly 26% jump in profitability. This next statement, the statement of cash flows, tells us where the company's cash is coming from and where it's going. For the 6 months ending June 30, 2025, cash provided by operating activities was about $64.7 million. This figure is pretty stable compared to the previous year's $67.9 million. It shows they are generating consistent cash from their day-to-day business, which is crucial. Now look at the investing activities. They spent about $62.9 million on acquiring property and equipment in the first half of 2025. That's a big increase from the $30.2 million spent in the same period of 2024. This clearly shows they are heavily investing in expanding their capacity and infrastructure. They also spent about $6.8 million on a business acquisition in April 2025. This is a strategic move to broaden their market presence and capabilities. In financing activities, they used about $14.9 million in the first half of 2025 compared to about $40.3 million in the prior year for debt repayment and dividends. This reduction in financing cash outflow suggests they might be managing their debt more efficiently or perhaps returning more cash to shareholders through dividends. Moving over to their intangible assets, a big part of their value comes from things you can't touch, like brand names and intellectual property. Their software and licenses are valued at almost $6 million, and their notices of acceptance as product designs and other intellectual property is valued at nearly $6 million too. These are important assets that contribute to their competitive edge. Goodwill, which represents the premium paid for acquired businesses over their net asset value, has increased from $23.5 million at the end of last year to over $30 million as of June 2025. This mainly reflects the goodwill generated from their recent acquisition. It shows they are willing to pay a premium for businesses that fit their strategic goals. Let's talk about debt. As of June 30, 2025, Tecnoglass has about $108.6 million in long-term debt. While this is a significant amount, it's important to note their consistent operating cash flow and growing retained earnings suggest they are managing this debt responsibly. They've also been actively prepaying some of their debt, which is a positive sign. Interestingly, the fair value of their long-term debt, which is what the market currently perceives the debt to be worth, is slightly lower than its carrying value. This can happen for various reasons, but it's something to keep tabs on. Now, regarding taxes, their effective tax rate is around 29 to 29.29 to 29.6%, which is close to the statutory rates in their operating regions. This indicates a fairly standard tax burden for their operations. Tecnoglass does have transactions with related parties, companies, or individuals connected to their management or major shareholders. This is common in many businesses, and the amounts involved here for sales and receivables seem manageable and appropriately disclosed. The company also highlighted some risks. New tariffs on steel and aluminum imports into the US are a notable concern. These tariffs can increase their costs and affect their pricing competitiveness. They've responded by diversifying their aluminum sourcing and adjusting prices, but continued trade volatility remains a risk they're managing. Finally, let's look at their share repurchase program. They bought back a small number of shares in the second quarter of 2025. This shows a commitment to returning value to shareholders while also managing their stock. They still have a substantial amount authorized for future repurchases. So what's the story here? Tecnoglass is demonstrating strong growth and profitability, particularly in the US market. Their investments in property and equipment and their recent acquisitions show a clear strategy for expansion. While increasing liabilities and tariff risks are factors to monitor, the company's consistent cash generation and growing retained earnings paint a picture of a healthy and ambitious business. They are navigating economic shifts and trade policies with strategic investments and price adjustments. Overall, Tecnoglass Inc. appears to be on a solid growth trajectory, building on its strengths in vertical integration and market position. They are making smart moves with acquisitions and capacity expansions, but need to keep a close eye on those tariffs and manage their debt effectively. What are your thoughts on Tecnoglass's latest financial performance and their expansion strategy? Let me know in the comments below. If you found this breakdown useful, please hit that like button and subscribe to Corporate Decoder for more in-depth financial analysis. And don't forget to join our Discord community linked in the description for even more insights and discussions. Thanks for watching, and we'll see you on the next one.